what the hell's going on? 1 minute I'm watching the 5-year bond and it's pushing 5-year terms down, right? And next thing I know, they're up again. What happens to people that are renewing now with these? Like, I want to go for a longer fixed term now. What kind of ringamaroo am I going to have to go through? And keep in mind, like, I'm self-employed. This is a nightmare coming up for me, right? But like, what are people like me? There must be a lot of people.
What are rates
like
right
me,
now?
right?
Yeah, what are rates right now, Mark? What are rates doing?
Like a good rate for a purchase, an insured purchase is around 4.5. If you're taking out
That's
money,
insured, so that's like the best 5-year closed fixed rate that you can get.
Yeah, everything's perfect. You're around 4.5, so insured.
And you're an employee with a T4, like a proper, right?
No, you can get insured if you're self-employed. It's a bit more difficult, but you can do it. So that's still available. But these people that are renewing, they're kind of at the mercy of the banks for right now. So your lender is going to give you a renewal rate, but because rates are so much higher, you're kind of limited as to whether or not you can switch.
That's why those prices need to go up.
You no longer qualify to change over banks. You're with CIBC. You were on a 3.3% 5-year fixed term. It's maturing this year. What would you expect that CBC would be giving you for a 5-year fixed term going forward?
It's going to depend on the client. It's going to depend, right? If you're you're golden and they know you're golden, I think they're going to be more competitive.
You're golden, so you're golden. You're good. Nothing's, but you don't qualify to go maybe somewhere else just because maybe the amount of debt you have or something like that. Maybe you're borderline golden, maybe not golden. But what would you expect? So like 5.5, is that kind of like the?
I'd say low fives. Probably.
Low fives, okay.
Yeah.
And then variable right now, if somebody would be going into a variable rate based on average discount on prime, what would someone expect?
You're gonna be around 5.7 if it's insured. Yeah.
Insured.
Now, if it's uninsured, you're gonna be around 6.2.
Yeah. What if you go private? What about private?
Private on a first 10%, probably
10%. Oh,
so that tells me that the banks are still, and the bond market is still heavily favoring rates to come down.
Yeah,
heavily.
Yeah,
this is not something that is being assumed to be lasting for a very long time.
What do you mean? The video title he just put out is longer, right? Like higher for longer.
The market's fighting them, right? The market's fighting the Fed. Yeah. They're fighting the Bank of Canada.
Job market, everything. Yeah. What? Tell us then. Tell us about your last video. What?
Well, Tiff Macklem, the Bank of Canada governor, said that we're going to be going higher for longer. They're not going to drop rates, but they're going to keep where they are until, they say, until inflation's back down to 2, which is supposed to take until the end of 2024. So that's another 1.5 years that we could be at this level. But the markets don't think that. They think that something's going to break in the system, and the banks will have to reverse.
So something would break. Either the economy or inflation.
Hasn't broken yet, right? The bank system has not broken yet. Is that what we're really saying? Is that what people think?
Something, right?
Only like exactly 5 of the biggest banks, like on the planet, just failed in the last month, right? But everything's fine here, everybody. Don't worry. Everything's cool.
What do you think about the U.S. inflation rate coming down to 5% in March?
Didn't ours come down too?
We don't have our data yet. That comes out next week.
Yeah,
U.S. is down to 5%, which is great. Because everything was sky high last year at this time, especially gas. But their core inflation is still fairly sticky. So I could see us getting down to 3% and 4% fairly soon, but maybe even 4%. But I don't think we're going to get back down to that 2%, especially in core inflation, as fast as a lot of people are hoping, as fast as the markets are hoping.
Not if real estate goes up.
Not exactly. We start going back up.
Yeah, real estate was their big sort of like, hey, if we can, control the real estate and housing prices, that'll sort of help with the overall core inflation numbers, right?
Yeah,
but that's working against them too.
Okay, so hold on a sec. Why do we or anybody? Well, I'm not going to lump myself into this group, but why do people still believe this guy, Tiff Macklem? Like, is there a reason to actually believe what he says? Or is it like a tool? Like, is he using the media as a tool to hopefully manipulate the market a little bit? Because I mean, do you believe a word this guy says?
I don't. I mean, he's a politician like any of them. You can never really believe what they're saying, right? You have to look at their motives. So of course, I think everything in his press conferences is no doubt orchestrated to get the market to move a certain way.
Mm-hmm.
Same with the Fed, and that's what forward guidance is about.
Yeah,
It's just to do it with to get a result without having to do the action.
that's right.
Mm,
And not
I like
having
that.
to actually do the action ever, right? Like to
Yeah.
be like, we're gonna do this, and oh yeah, you know what? You
So
guys all reacted to that, but no, sorry.
The higher rates for longer, what would be the motive there?
to get people to not, so we don't take on more debt. So excuse me. So variable rate holders, those with floating debt, don't go out and buy a car, don't go on a vacation, don't use their lines of credit. He just wants people not to spend. He wants us to slow down spending. And that would be why that's his end, right? Is to get Canadians scared.
So, but it's not working, is it?
Without
working?
having to actually raise rates anymore to be able
Right.
to cause that same effect. It's, hey, how do we scare people to be able to just like stop their spending on their own and actually reel in their debt a little bit as well?
Exactly. Without doing the thing that is going to break the system, without forcing those higher cost of borrowing that will cause stuff like SVB, without actually having to do it.
So where do we stand right now? I mean, we've got the market's going up. We've got, jobs are still healthy. We've got inflation numbers coming down. I would assume that we're going to see a lower rate of inflation. I don't know what number that's going to be, but I think that we're going to see our March numbers come out that are going to be much lower than, what they were before, whatever that means. As far as like, people who are going to be borrowing money and stuff like that, like how do we advise people when it comes to taking on debt or making decisions based on where the rates are going to be? Like right now we know that the rates are high. You're a firm believer right now that rates aren't going to be coming down anytime soon.
I am, yeah.
Okay. So if somebody's coming to you right now and they're in trouble and they're saying to you, Mark, geez, we can't afford these payments, we can't afford our house, we can't afford to do the things that we need to do, you're sometimes, the only option that you can give them is to sell.
Well, right now, because fixed rates have come down a little bit. So if you're in a variable rate mortgage and you're paying, say, 5.7 or 6%, you can still lock in for, say, a 2 or 3 year term at low fives. So that is saving some people some money, being able to have that option. A few months ago, when fixed rates were in that 5.5%, it didn't really make that much of a difference, right? But a full percentage difference, I mean, that does help some people. So I see a lot of people now locking in at 2 and 3 year terms to kind of wait to see which way the wind blows over the next couple of years, right? If the bank does reverse, if something does happen, they don't lose out too much. But if rates do stay high as they are, then they're kind of protecting themselves.
Are people paying the 3 months interest? So if you got like a 3 year term left, but now you want to go to a 2 year term fixed, closed, you have to pay the 3 months interest penalty?
You do. You do, yeah. If you lock in for the remainder of your term, there's no penalty, but any changes to the term of your mortgage, then that's technically a refinance and you do break your mortgage.
And if you just lock in at the end of whatever's left on your term, what's the rate that they're going to give you? Is it a discounted rate or is it?
Not from what I've been seeing. No, it's not a blended rate. It's whatever they are offering based on the borrower at the time. Okay. So if you can't qualify again to go somewhere else, I mean, the banks know that. So I've seen them offer fairly uncompetitive rates, right? The homeowner comes to me and say, hey, they're offering me to lock in at 4 years at 5.8%. Can you get me out? And I can't, and the banks know this. So they're offering some higher rates to lock in.